the thing that you see is that risk is going back on, and you think that that is sustainable?
Look, I think there are a few technical factors that we've now hit that are giving us some hope. Number one, the S&P last week crossed that 3,000 threshold. That's not only a psychological barrier, but it was also a technical 200-day moving average a lot of investors were looking for. But perhaps more importantly, what we saw really in some of the above average cash levels sitting on the sidelines during this 30, now 40% rally, both in the institutional space and the retail space. Many of these players now have to play some catch up to get their performance levels looking, at least in average or in line with the indices. How do they do that? Well, one, they could try to chase some of these COVID winners, the tech and the healthcare names, or they could really look to some of the laggards in the market, sectors like the financials, industrials, parts of the energy complex. And clearly, since mid-May, what we've been seeing is that there has been this rotation to some of those laggards. Of course, that's also driven by, the better health numbers coming out of the coronavirus cases and the increasing mobility and reopening story we're seeing across the country. So some good technical factors. We've run quite a bit. Periods of consolidation are natural, but we see some hope for a sustained rally here.
It's pretty crazy, though, Mona. I mean, if you look at all the cross currents swirling, you've got the worry about a second wave of COVID, and we don't even know if it's gone. And then you point out how unsettling the entire country is right now in terms of racial introspection and a profound, where everyone's trying to figure out, what to do and how to change these things. And then the demonstrations even play into the possibility that it doesn't help with the COVID response. And then, we're still worried about China. I mean, there's nothing good happening except, I guess, reopening. But it just seems like the reopening could be, cut short at any time by a resurgence of the disease. So maybe that continues to make everyone skeptical. So maybe that helps. But it seems like it's a real concern.
Yeah, I think one, on the health side itself, what we're seeing generally, could there be hotspots that emerge? Absolutely. But will we face another reshutting of the entire U.S. economy? Most likely not. We'll be able to deal with these outbreaks on a more regional basis, which is helpful. Obviously, we'll hopefully have more therapies in place to help as well. And that pressure on the hospital systems seems to be alleviated, particularly in the epicenter of the crisis here in New Jersey and New York in particular. On the protest front, you bring up a great point. This is really a profound period of introspection going on in the country here. We suspect, some of those that are protesting are also part of this 40 million population that have lost their jobs, and of course, perhaps at higher risk for COVID itself. So clearly, some changes need to take place after this, really senseless murder that we saw just last week. But from a market perspective, the S&P 500 index itself is a compilation of the 500 largest market cap companies in the U.S., better capitalized, more liquid, perhaps offering better exposure to some of the winners after this crisis. And so when you think about globally, really what your investable asset classes are, you can see why the S&P 500 perhaps has been a flight to safety asset class. Sadly, this crisis has really been most impactful to the small businesses and the mom and pop shops for this crisis in particular. And so we're seeing that reflected in the marketplace as well.